Hello and everyone, good day, students. Today we are going to discuss our learning outcome 3, be able to apply taxation's planning measures to minimize or defer tax liabilities. We are going to tax planning measures in the UK, focusing on how individuals and businesses can effectively minimize or defer their tax liabilities. So this knowledge is important for any aspiring tax professional or any interested in understanding the interactions of the UK taxation systems. So my name is Yasir Golfraz, and if you have any issues, if you can't see or can't hear me, please do let me know. So who's the Mr. Ali? Can you see my screen?
Yes,
And
totally.
can you hear me as well properly? No issues?
Yeah, without any issues. Yeah, I can hear you as well.
Okay, let's start. So before we explore specific strategies, it is important to recap some fundamental concepts. PPCIO, professional behavior, professional competency, and due care are essential for any tax advisor upholding confidentially, integrity, and objectively are key pillars of ethical tax practices. So may I know that are you practicing or you are just trying to get license or certification?
I'm in the stage of getting ready to get the license first, then we'll practice. But yes, I do help other practice, not on my name, but those who have license. I help them to prepare trial balance, then prepare the accounts and notes because I was trained in Costain Group PLC,
Okay, that's fine. So you have
accounts.
done any
For
qualification previously? I mean that,
ACCA, yeah, I did ACCA.
or you complete your ACCA?
ACCA I have done, yeah.
Okay. Or so they don't offer license or?
No, they offer license, but ACCA is not like that. If I even have the experience for years, they don't offer the license like that. We have to
No.
go through. Because I work in industry full time, they will not give me license. They will demand me to go through, uh, in practice 3 years again.
Oh yeah, experience. Go
Yeah,
through experience route. Yeah.
for
Anyway, this
practice
is a quite
experience.
quite good. You just need a license, and this is a good and obviously institute UK Versity is a good for providing IFA qualification. And
Yeah. Also,
anyway,
uh,
yeah,
be- because I'm from Bangladesh and I see that this organization have a branch in Bangladesh as well, so which is good.
yeah, they have globally, they do many countries. They keep progressing. You know that. I was talking to one of their officer. They might get a chartered status later some point.
Oh, that will be really great.
Yeah,
Really.
they're trying to, because they are already member of which is IFAC. You know that
Okay, yeah,
International Federation of Accountants. They are a
yeah.
full member. Previously, they wasn't the member a few years back, and then they got associate membership, and now they are full member. So
I also notice um, many of my friend who are chartered degree holder have this qualification as well, especially those are in insolvency practice.
yeah. Anyway, uh, let's start. Then I'll talk to you after a bit about other things when I'll finish lecture. Okay.
Thank you.
Okay. Parent, subsidiary, associate, simple, and then. Indicative content, range of different type of investments and other expenditures that may result in a reduction in tax liabilities for individuals and both incorporated and unincorporated business organizations. Be able to advise on the appropriateness of each of these types. Individuals understanding of legitimate tax planning, then mitigation of tax based on numerical analysis and reason arguments, assessment of ethical and professional issues, current issues in taxation in the UK. So there are different types of tax reducing expenditures. like individuals, personal contributions or NIC, and then capital gain tax allowances. So like utilizing this, annual allowances can help minimize tax on capital gains. Businesses, capital allowances, uh, then legitimate tax planning. Understanding legitimate tax planning is very important. It involves arranging your affairs within the framework of the law to optimize tax efficiency. This might include timing of income and expenditures, choice of business structures, like selecting between sole proprietorships, partnership, or limited company can impact tax treatments. Numerical analysis and reasoned arguments. Mitigation tax often requires numerical analysis and reasoned arguments. Tax protections, comparative analysis, ethical and professional considerations. Tax professional needs to address ethical and professional issues. Balancing tax efficiency and compliance, like striking a balance between reducing tax liability and ensuring compliance within tax laws is very essential. Then current tax issues in the UK, stay up to date on current tax issues. Digital taxation. You understand, Ali, some of things are explaining that in my own words might be not here, but I just
No, that's
expanding.
okay. Yeah, that's fine.
I just expanding sometimes. So,
Yeah,
like,
you can understand.
environmental taxes. This focus on sustainability has led to consideration of environmental taxes on carbon emission and single-use plastics.
I see. Okay.
So here, income tax returns or income tax rates, as you know, if you're practicing that, basic rates, higher rates. Basic rate is 20%. This rate applies to income between, 1 to up to 37,500 pound. Additional rate is then is of up to 150,000 higher rate, which is 40%, and then additional 45% if your income exceeds 150,000 pound. The additional rate of 45% comes into play. Then dividend income tax rate are lower than normal rate to account for tax already paid by companies. These rates apply to dividends from shares and investments. Basic rate taxpayers pay 75% normally tax on dividend income. And here is a calculation basically, but try to explain percentage and different type of taxes, like a higher rate and range. So a higher rate tax face a 32.5% tax rate on dividends, if I'm not wrong. So then additional tax rate payers of dividend is 38% or 38.1%. So tax-free allowance, personal allowance, first 12,500 of your income tax is free in UK. You know that up to 12,500 pound is free. Saving income nil rate band. Basic rate taxpayer can earn up to 1,000 pound in saving income tax-free, while higher rate taxpayers can earn up to 500 pound. Then a starting rate of 0% applies to the first 5,000 pound of taxable saving income. Dividend nil rate band, the first 2,000 pound of dividend income is tax-free. So then days in the UK, your residence status is determined by the number of days you spend in the UK. So have you got any idea about how many days if you live in UK?
Well, Previously,
Just
when I started, like they
yeah,
used to say that you have to stay 90 days or 180 days to be
about
resident.
here he's explaining residence status. So automatically you are not resident if you spend less than 16 days in the UK. So you are automatically not considered residents. Uh, the number of UK ties you have determines your resident status in the 16 to 182 days range. Child benefit income tax charge. A charge is applicable if your income falls between 50,000 and 60,000 pounds. For every £100 of income over 50,000 pounds, there is a 1% charge on the amount of child benefit received. That's it. Then core benefits, the relevance base level of CO's emission is 95 gram per kilometer. So individual and business providing company cars, the percentage for petrol cars and diesel cars meeting the, based on CO2 emission status, which is called RD2 standard. 50 gram or less, 16% tax rate applies, 51 to 75% rate increase slightly to 19%, then 76 grams to 94 grams per kilometer rate is 22%, and then over 95 is 23%. Then car fuel benefit for company cars, the base figure for calculating the car fuel benefit is 24,100 pounds. This amount is added to an employee's income for tax purpose. Company van benefits. Company vans also comes with benefits and charges. The company van benefit scale charge is set at 3,430 pounds. Additionally, the van fuel benefit, which relates to personal use of the van for non-business purpose, is set at 655 pound. Then ISA is a very common, individual saving accounts are an, excellent way to save and invest while enjoying tax advantages. So the overall investment limit of ISA is up to 20,000 pound. So this means you can contribute up to this amount across various ISA types without incurring tax on interest in dividends or capital gains. Then property income. If you are involved in a property investment, it is very important to note that a basic rate restrictions applies to 75% of finance cost relating to residential properties. This means that only 75% of the finance cost, such as mortgage interest, can be used to offset against rental income when calculating taxable profit. Then he's talking about a pension scheme limit, approved mileage allowance, car capital allowance, rate of allowances. So pension scheme allowance, individuals can contribute up to 40,000 pounds to their pension scheme annually and still qualify for tax relief. Minimum allowance is 10,000 pounds. Even if your contribution is lower, the minimum allowance is received tax relief is set at 10,000 pounds. Income limit, if you exceed over 150,000 without any earning, certain pension tax benefit maybe applies. So maximum qualifying contribution, the highest contribution that can receive tax relief is capped at 3,600 pounds. Approved mileage allowances for cars up to 10,000 miles, 55p per miles, 55 pence. Over 10,000 miles is 25 pence per miles. Capital allowance rates to different assets. Plant and machineries, main pool allowance is 18% and special rate pool allowance is 6%. Motor cars, new car with CO's emissions up to 50 grams per kilometer, 100% allowance, 18% for between 51 and 110 gram per kilometer, and 6% for over 110 grams per kilometer. Right. Annual investment allowances, the rate of allowances, whooping 100% allowance for a deduction of the full amount from profit. The expenditures limit for this allowance is set at the 1 million. So revenue limit cap on tax relief. So revenue limit for cash basis accounting is £150,000. Cash basis accounting. So cap on income tax relief, tax relief unless specified otherwise are capped at the higher of £50,000 or 25% of income. Then it comes to corporation account, tax. The rate of corporation tax is 19% for financial years. If I talk about 17, 18 and 19. Any idea about now, Ali? Any here?
It's going to be 25% here.
Yeah. Okay. So that's why I asked, that he's up to 2019. He's not talking anything.
Till last year, like 2020, even 2023, it's going to be 19%. From next year, it will be 25%, I think. That's the new tax.
New tax. It's a quite high anyway. That's 6%, 25% is.
Yeah, just I think like they're trying to hold back the inflation across the country, so increasing interest rate and taxation, everything.
Yeah. But the main thing isn't affect on major businesses. It affects that small businesses and
Medium businesses will
medium
suffer.
Yeah. So anyway, so then is a value added tax or VAT starting rate of VAT is 20%. Isn't 22% now? If or still 20%?
No, it's still 20%. Yeah,
still 20%. Okay.
But there is like for small companies below 2,000. I mean 250,000 income.
Yeah.
They can choose the flat rate or other schemes lower rate.
Yeah. So registration limit is £85,000 and registration limit is 83. I think so. This is still same.
Still the same, yeah.
So inheritance tax rates and bands. Inheritance tax, that tax on your inheritance. The nil rate band for inheritance tax is £325,000, and there is also residence nil rate band of £150,000. So the rate of tax on amount exceeding the nil rate bands is 40%, and a lower rate of 20% applies for certain lifetime gifts.
Okay. Now lifetime gift is also taxed. Okay.
Yes, it is also taxed. That they don't talk without tax in this country.
Yeah.
Even that I heard about that Europe is worse than that here. That Europe taxes are more than here.
I think yes. Unfortunately, yes.
In some cases, their tax rates are up to 50%.
I mean, this one, the inheritance tax, I don't like this one. This is like this parent already paying tax.
No one likes this. I'm not in a practice because I was thinking to do some practice, that all, but I just stopped because of some reason, because I'm doing currently my bar at law, that I finished LLB, and then I was just thinking to do corporate law, that.
Oh,
So
yeah.
I did LLM, and now I was trying to, that bar at law exam. So that's why I stopped my, these things. But I'm still, because I love accounting, so I start teaching with them, and still I will think about practice at some point. But I was some people come and asking about inheritance tax. People are not happy with the inheritance. You know that you get something. You know that inheritance, basically you already pay tax on your property.
Exactly.
You understand what I mean? That if
Yeah.
your father is, you need to understand inheritance tax basically. Uh, you already, your fathers, or might be you living with them, but already paying taxes on your property or everything. But when you get, inheritance, you have to pay tax,
Yes. I find this tax is unfair totally.
Yeah, this is, it looks like most of people thinks that is very unfair, or I think so, it's unfair. You have paid, I think so. Have you paid any?
Inheritance? No. We did different way. Like my mom is alive, so we pass all the property to her name. So
Yeah, you don't need to pay. You
yeah,
don't.
we have to until she is alive. We don't pay.
Yeah, you don't need to pay. You don't need to
Yeah.
pay. Yeah. Right. Capital gain tax uh, is another shape of tax. There are normal rates and higher rates of individuals with residential property attracting different rates. Normal rate 10% and 20%. Residential property rate
Yeah.
formal format. Yeah. So 18% and 28% annual exempt amount up to £12,000 of gain or tax-free entrepreneurs relief and investor reliefs qualifying individual, enjoying a reduced tax, which is 10%. And then a lifetime limit, a cap on the total gain eligible for the relief, national contribution, national insurance tax or national insurance contribution varies for different classes. As you know, there are different classes for national insurance. Class 1 employees range from 12 to 2 to 12%, then various based of earning. Class 1A here is a 13.8%. Class 2 national insurance first weekly rate for self-employed individuals, rate of interest and standard penalties, official rate of interest 3.25, rate of interest on underpaid tax 0.50, and then standard penalties of errors vary based on taxpayer behavior ranging from 15 to 100%. Just want to confirm
I think interest rate gone up.
Yeah. What is the current rate for inheritance tax?
Inheritance tax current rate. I have to check. I cannot
I
remember.
think so. It still is, nil
Same
rate.
probably. Yeah.
Yeah, nil rate band is 325.
25 is still
Okay,
same.
still same. I believe that is still same. Okay. Yes. So evaluate type of investment and expenditure resulting in a reduction in tax liabilities. Since most companies pay tax, the importance of corporate tax must be considered in any investment appraisals. Impact of corporation tax on investment, tax charged on operating flows. Corporation tax impact a company's profit and is relevant cash flow for net present value analysis. So tax relief on investment standards here. So writing down allowances, WDAs, are allowed as expenses against profit, influencing the tax relief on investment. Impact of taxation. Are you okay, Ali?
Yes. I'm
You haven't
fine.
got any problem
No.
while sitting?
No.
Okay,
That's
just let me know if any issues. You can leave. Okay, if you got any problem, I don't know, because you said you got bypass, so that's why. Sorry, I'm just taking some times I have to explain few things. But if you got any issue, just let me know. Okay.
okay. Sure.
Impact of taxation on discount rate here. So cost of debts always use a post-tax figure that considers tax relief on interest. So then VACC calculation here always use a property accounting for tax implication ensures an accurate computation. So impact of tax on the discount rate when the calculation of VACC, which is a weighted average cost of capital, it is important to consider the tax effects on the cost of debts. So the cost of debts should be a post-tax figure, which means it should be just the tax relief on interest. Impact of taxation on cash flow. Taxation has the following effect on the investment appraisal problem. So project cash flows are subject to taxation, which influences the overall appraisal of a property viability, capital allowances, then complexities of tax effects in practice. Taxation is affect or articulate and influenced by various factors, including taxable profit, tax rates, accounting periods, tax payments, dates, capital allowance, and loss available for set-off. Capital allowances. For tax purpose, businesses can deduct the cost of an assets as depreciation, as they do for financial accounting. Instead, they utilize capital allowances, VDAs. So some key point VDAs are based on the written down value of assets, which can be a reducing balance or straight line basis. So total VDA given over an asset's life mirror its fall in value. Written down assets are claimed as soon as possible, expect in the year of disposal. So the year of sale or scrap leads to balancing allowance or balancing charge. Then international terminology, as financial terms continue to globalize, you might encounter different terms of capital allowance, such as written down allowance or tax allowable depreciation. All these terms are interchangeable. Time of the assets purchase. Timing of when an asset is purchased has notable consequences in finance. Assets are generally, assumed to be bought at a specific time, often denoted as a T. This moment could be the very end of an accounting period, such as December 31st of December of the years, 2019, 20 or so on. So or the start of another period like January 1st of year 2000, let's say 2024. Assets bought at the end of an accounting period. Assets here purchased at the end of an accounting period. When an asset is purchased at the end of an accounting period, it sets the stage for a series of tax related events. So now here is a time line: 31st of December, 31st of December. So the asset is purchased, making the start of its journey in the financial system. Then first year of ownership ends. Then profit earned during this period. Then second year of ownership. Profit earned during this period are taxed. A second, written down assets can be claimed against these profits. And then third year of ownership, year of disposal. So profit continue to be taxed and any remaining written down assets claims are made. So year of disposal. Year of disposal, asset is sold or disposed of. Tax implications depend on the timing and proceeds from the disposal. Laying out long NPV questions. So for the majority of investment appraisal questions in exam, the following pro forms in recommendations. So net trading value, tax payable, residential scrap value, tax relief, working capital flows. So basically adjust net trading revenue, taxable and cash flows accordingly for this additional years. Just keep in mind the concept of inflation and the time value of money when adjusting cash flows for different years. Here, pension and tax affects investment products. Pension are, cornerstone of retirement planning and offer valuable tax benefits. Contributions, you contribute to a pension scheme during your working years, building a fund for your retirements. Tax relief, investment growths, withdrawals, enterprises investment scheme then is designed to encourage investment in small high risk companies. So their key points are tax relief, capital gain tax, risk and reward, seed enterprise investment scheme, higher tax relief, seed enterprise scheme. This scheme, that higher tax reliefs, capital gain tax exemptions, venture capital trust then. So venture capital tax basically pool investment to provide finance to a small higher risk trading companies. Key features are, tax relief investment can claim income tax relief on their investments, dividend tax, tax-free dividends, high risk and reward investments. Type of trading loss reliefs. Here loss reliefs and against total profit, against future total profit, then current AP and carry back. So carry back mean 12 months. Loss reliefs can sometimes be carried back to offers against profit generated in the previous 12 months. So here is a current accounting period. Current AP accounting in some cases a loss incurred and in the current accounting period can be offset against profit from previous accounting period, providing relief even before the end of the financial year. Here relief against total profit before QCD. So lost relief can be claim against a company's total profit before considering qualifying charitable donations. So this mechanism helps reduce the overall taxable profit, which is turn lowers the tax liabilities. So that there are a claim against total profit before QCD must claim against current accounting period first before a claim against previous 12 months. Claims do not have or to be made profit partial claims are not possible. For example, if the total profit before QCDs are 56,000 and the trading loss is 60,000, if a claim is made, loss is used to offer 56,000 pound of a profit and only 4,000 of loss remains. So unused QCDs and wasted relief here, if there are no remaining profit from which to deduct QCDs, the QCDs become surplus and no relief is provided for them. Essentially, they are wasted in terms of reducing taxable income. Carry forward relief. Trading loss are automatically carry forward under trading loss automatically carry forward if current and carry back claims have not been made, or any loss remains unrelieved after the current year and carry back claims have been made. So pre 1st August 2017, trading losses are automatically carried forward. They can be offset against the first available future trading profit from the same trade. Importantly, these losses cannot be used against any other type of profits. So post 1st April trading losses, for trading losses incurred after 1st April, businesses have more flexibility. These losses can be claimed to offset against total profits. Corporation loss pro forma. Here, corporation loss pro forma is a comprehensive tool that assists businesses in understanding their tax liabilities and losses across different years. Here is again same loss strategies, relief strategies, short previous accounting period. Losses can be carried back 12 months to offset against profit from the previous accounting period. If the previous period is less than 12 months, the loss can cover a proportion of the profit preceding that. So factors to be considered when choosing loss relief. Factors in choosing loss relief are two main considerations: whether the company prefers highest tax relief, current and carry back claim, or whether the company desire earliest relief as soon as possible. Also consider the changing UK corporation tax rates. Capital losses. Capital losses are automatically relieved against current period chargeable gains. Any excess loss is carried forward to offset against a future against no carryback relief available. Capital losses can't be set off against income. Research and development tax credit applies to SMEs, can deduct an additional 130% of qualifying research and tax expenditure for tax purposes. So if the deduction creates a loss, it may be surrendered for a cash payment from HMRC up to 14.5% of surrendered amount. So qualifying RD expenditure must be, revenue expenditures. Personal services compliance, IR35. So personal services companies, RI35 legislations is RI35 tax avoidance by using personal services companies. So IR35 applies when PSC usually has just one shareholder who use the company to provide services to client. IR35 applies. These concepts are important for effective tax management and compliance. By understanding loss relief strategies, research and development tax credits, and the implication of IR35 legislations. So businesses can optimize their tax positions while ensuring legal companies. Here, relevant engagements, client professional responsibility. When offering tax planning advice to client, you assume full responsibility for the advice you provide. Upholding the principle of professional competence and due care is paramount. So then legal compliance, then managing a disagreement with HRMC means that you might suggest arrangement that HMRC might challenge. In such cases, you need to explain to the client that complete details must be provided to enable HMRC to assess this matter. So additionally, warn them that negotiations with HMRC take time and may increase expenses. So if IR35 applies, also known as the intermediaries legislations. So is a set of tax regulations in the United Kingdom that affect individuals who provide their services to client through an intermediary as such as a personal services companies. The main goal of our IR35 is to determine whether a worker is in a sense an employee of the client company for tax and national insurance contributions purpose, even though they are operating through an intermediary. Evaluate the mitigation of tax for individuals and businesses. Why you are providing tax planning advice to a client, you are fully responsible for the advice you give, as discussed above. So then tax evasion or attempting evasion of tax is a threat to the fundamental principle of integrity and professional behavior. It may be also to subject to criminal charge under both low tax and money laundering legislations. So here, direct tax avoidance scheme. Promoters of tax avoidance schemes related to direct taxes uh, like income tax, national insurance contributions, capital gain taxes, corporation taxes, inheritance tax, and stamp duty taxes have specific disclosure obligations. Taxpayers, may also have obligations to disclose scheme details in certain cases. Then national notification of promotions arrangement or proposed arrangement that primarily enable people to obtain a tax advantages must notify authorities. So VAT avoidance scheme, businesses utilizing VAT avoidance scheme must disclose their usage. Certain VAT avoidance schemes are put on a statutory register. Failure to notify tax office HMRC about designated scheme using incur a penalty of 15% of the VAT saving resulting from the scheme. Penalties for other arrangement amount to £5,000. Serial tax avoidance. So taxpayers engaging in multiple defeated tax avoidance scheme after 6 April 2017. So may be categorized as serial tax avoiders by HMRC. A defeated scheme is one where the expected tax advantage is unable due to agreement with HMRC or favorable court ruling. Serial tax avoidance warning notice. Taxpayer receive a serial tax avoiding warning notice that is valid for 5 years. So this notice requires them to provide additional information about their tax affairs annually, including their use of tax avoidance scheme. Sanction of serial tax avoidance offenders may include penalties for entering additional tax avoidance scheme during the notice periods. So the penalties may increase based on the number of scheme entered. Other consequences include being publicly named as a serial tax avoider, and restrictions on direct tax relief for up to 3 years. So evaluate ethical and professional issues arising from the giving of tax planning advice. Ethical and professional consideration that arise when providing tax planning advice. Aspiring tax professionals, it is vital to understand these issues to uphold integrity, maintain client trust, and adhere to the highest standard of professional conduct. So he's just defined ethics and tax avoidance scheme. So ethics in planning tax planning. Ethics, plays a vital role in tax planning, and it is essential to align your actions with fundamental principles such as integrity, objectivity, professional competence, and due care, confidentially, and professional behavior. So, dealing with prospective clients, when engaging the prospective client, it is important to consider any potential threats to fundamental principle. If a client possesses a threat that cannot be effectively managed, it is advisable not to accept their engagement. If contacting existing accountants, be cautious and respect client preference. So direct tax avoidance scheme, promotion of tax avoidance scheme must disclose these schemes. In some cases, taxpayer themselves may need to disclose schemes details. A key factor is whether the main benefit of the scheme is to gain tax advantage. Conflict of interest. Identifying a potential conflict of interest is vital, especially in scenario involving relationship like spouse, business partners, and shareholders. Professionally, responsibility in tax planning. When providing tax planning advice, we need to remember that you are responsible for the advice given. Distinguish between tax avoidance, which is a legal, and tax evasion, which is illegal. Okay. Tax irregularities and evasion. Tax irregularities or tax evasion need to be addressed. Client should disclose relevant information to HMRC. If client does not cooperate, consider ceasing to act for them and notifying HMRC. Then is money laundering. Anti-money laundering regulation is very important. Identifying client there, reporting suspicious of money laundering is a vital to prevent involvement in financial activities. Then serial tax avoidance, engaging in multiple defeated tax avoidance scheme may classify taxpayer as serial tax avoidance. This triggers additional reporting obligations and sanctions. So GER, very common, you might heard about General Anti-Abuse Rule, is designed to deter abusive tax arrangement. It targets scheme with significantly less income, profit gain, or significantly greater deduction losses or claim for repayment. Financial ethical principles. Financial ethical principles are cornerstone of a trustworthy accounting profession, and understanding them is important to maintaining integrity and public trust. Threats. Ethical threats can compromise an accountant's ability to uphold these principles. There are various threats that accountants in practice and in business may face, including self-interest, familiarity, intimidations, and advocacy. So, advocacy threats. So, each of these threats can potentially lead to unethical behavior. Safeguards. To mitigate threats and ensure ethical behavior, safeguards are put in place. So there are different kind of safeguards. Members in practice, for member in practice, developing a leadership culture that emphasizes fundamental principle, implementing policies and procedures for equality control and compliance with ethical principle, identifying threat, evaluating their significance, and implementing safeguards, preventing non-term members from influencing, engaging, communicating policies and procedures to all staff. Then members in businesses are different kind of like incorporating ethical and competence as key criteria in recruitment, establishing internal control and monitoring system of for quality and performance, promoting ethical behavior, providing policies and procedure to support employees in raising ethical concerns, also called whistleblowing. Applying safeguards can be tailored to specific situations to mitigate ethical threats effectively. Review current issue in taxation. Here, our EP Limited and CHO Limited are resident companies with the counting period ending. Is giving such an example, ending on 31st March each year. In the context of business profit generated in Garia, they are subject to a 13% corporation tax rate in that country. It is important to consider the impact of J Limited's residency on the amount of corporation tax payable in the UK and how it affects the overall operation of the replay businesses in Greek trading. So, given the evolving situation, we all adopt our approach based on the percentage of ownership in J Limited. So you will explore the option of electing to exempt the profit of J Limited's overseas permanent establishment from UK tax. So this decision holds significant implication for the company's taxation, and you'll analyze the advantages and drawbacks of making this election. So regarding the purchase of investment property, here we need to consider the value-added tax implications to evaluate the inheritance tax liability that may arise from gifting 20,000 shares in REP Limited to the trust on November 2020. So you will consider various scenarios based on share ownerships percentage using the provide VAT rates. Given that you currently own 80% of the ordinary shares capital of REP Limited, you will take this into account when performing, the calculations. Here again, purchase of investment property there is some calculation, and that's it. Shareholders value per share, property, gift of share to trust on November 1st. That's it. If you wanna read further, you can go to ACCA or IFAC website. So that's it for today, Ali. Any question or anything else if you wanna ask?
No, the only thing that I say we will do this module, then we have to write the essay as in the question in essay, right? Then we just submit it. That's all,
No,
right?
have you got assignments?
I mean, there is assignment in the, when you log in, there is number of assignments, isn't it? Or we have to get it separately.
Yeah. Which module you are currently studying? Only tax one, or if there is any other module?
Only tax, only tax.
Okay. How many modules you need to study? Did you get any exemptions?
I mean, I have to do only one tax paper. That's it, advanced tax.
Okay, yeah, that's fine. You need to write an assignment, which is, in our last session, I think so, next Sunday. Yeah, next weekend. So we will discuss assignment, but you need to write an assignment. That's it. You can get assignment there. Have you got login and everything is there?
Yeah, yes, I have.
Yeah, if you go there, there is assignment which you can start anyway. So there is only one assignment. If there is any issue, you can start writing an assignment. I will discuss, next weekend, but you can start your assignment. So if there is any issue or any question or anything else, you can ask me. That's not an issue.
Okay, I'll do that.
There is no question. It's just an assignment, simple assignments. I hope that it will be easy for you.
Okay, I'll start it because I was not very well. So
no, you can start anytime. That's not an issue. That's not, because there are some other students which can't attend, obviously. So we send out our, material and everything. So you can start writing your assignment. That's not an issue.
Okay.
But
great.
Still, if there is any issue, you can drop me an email at, yasir@ukversity.co.uk or.
Okay. Yeah, I can do that.
Can you see chat here?
Yes.
You can.
Yeah, chat.
Yeah, here.
Yeah, I can see your telephone number. Yeah.
Yeah, you can add me and you can, message me if you have any issue or anything else. Okay.
Okay, great. Thank you.
Let me check my number. I normally don't. Here I can't.
This is last 315 at the end. This number.
One. Yeah, 1315. Yeah. If you have, if any issues, any question, you just can message me or drop me an email at yasir@ukversity.co.uk. Okay.
Okay, sure.
So that's where, and hopefully you'll get better soon. So inshallah, we'll meet next weekend.
Thank you very much. Inshallah, will be okay.
Okay, thanks, Ali. Thank you very much.
Thank
Bye
you.
for now.
We have tomorrow class, right, as well, or
yes, there is a class tomorrow as well.
Okay, or inshallah.
Same time, 9 o'clock.
Okay.
Okay, thanks everyone,
Have a nice
and bye for now.
Bye-bye.